All right, ladies and gentlemen, I hope you're having a wonderful evening. We have the University of Michigan consumer sentiment tomorrow, and with all of the uncertainty going on, I thought that we should go over hello, that's me. We should go over some of the misconceptions. So, here's the deal. Why is this important? Because a couple of weeks ago we had the consumer sentiment. You may have heard about it all in the news media that inflation expectations are rising. There was a big pop in them at the beginning of the year after the presidency, and it actually caused a big market move. Now, we just had the non-farms, the CPI, and now the PPI today. And the reactions are kind of muted. The market is very forward-looking, and we're going to talk about that today because there's a lot of other worries. But beyond that, I want to go over the consumer sentiment because the market has always had this data. Believe it or not, this data has been reported since 1980. So we're going to go over this data. I actually put it through an AI for you, and we're going to focus on one key part of this because you get a number, it comes out tomorrow morning, and that number is an average. However, there is a lot of polarization, and quite simply, the thing that messes everything up, politics, kind of skews that number. So I think the best way to understand the data is to know how it works. So we're going to go over this, and this is the part I want to talk about because yes, you will be getting an average tomorrow, but that number is an average between Republicans and Democrats. And lately, this is what they are expecting. Democrats think you will get more inflation than any other moment, and Republicans think that you are going to have deflation. Meanwhile, independents are, I think, where you want to be at. So even then, tomorrow, I think this is the number you really want to be looking for when it's all said and done. So that's the 1 year chart. And if you really want to get crazy, no, that's the one. This is the 5 year chart. So yeah, and independents on the 5 year are very calm. But again, even, let me put it this way, when inflation was 9%, Democrats were like, nah, inflation's not going up in 5 years. Now they think it's going to double. And at that moment, Republicans were like, nah, inflation's going to double, Democrats. And now they're like, no such thing, inflation. So, like I'm saying, am I trying to knock either side? I can make a couple of jokes here and there, but for the sake of understanding this data, I think that the independence or being able to pick apart this data is going to be very important. So I did go through the University of Michigan Consumer Sentiment website. I went through and I pulled this all and I put it through AI, and I wanted to see if I just told it to tell me when the divergence or polarization started. And that's what we're going to go over here today. So I have that for you. I have the keys, the plays, all of that good stuff. And here's the deal. I wasn't going to make a watch list. So if you are on the recap, you're going to have to deal with me. I wasn't going to do a watch list, but I'm bipolar. That's what happens. And I thought I'd make a little bit of fun with this because you guys do not follow any instructions well. It's amazing we have thousands of long terms. You know that? God is good, baby. So I said, let's just try it again. I have a challenge for you at this point. Fuck that. I said there's no way this is possible. It has to be possible. There's no way. There's no way. So we have a lot to go over. But in the meantime, good evening, baby. What's up, man? How you living? The theory, I think, well, you have to wait till after. I have a whole show planned for you. What is this? You guys saying hello and throw money? Did I play a song? Did a stripper come out? What? What's up? What's up, y'all? I said good evening. What up, baby? Hold on, y'all bombarding me. I got a whole show for you today. We have consumer sentiment scam. We got to go over the keys, the plays. I do agree that unleashing If you didn't tax the lower income base or even a good portion, that would be amazing for the economy, and you could get away with it, and there's no reason why we do it. But yeah, I agree, 100%. 100%, bro. So, Chad, what's going on? I did miss you. I missed you. I missed some of you. I know somebody hate me right now watching. I don't know why, bro. One day. So just don't take yourself too seriously, man. Have fun. Welcome to the internet. You know, you got pop, dodge a weave, baby. Dodge a weave. You got to have a little fun sometimes, man. So I hope you enjoy it. I hope you guys are ready, man. And let's go. You guys, this is live, right? Yeah, I actually started it this time. So we're good to go. You bought the dip? Well, I have good news and maybe bad news. Because last time I've ever brought up good news, it turned to bad news. I don't know. But here's the deal. Let's start with the consumer sentiment. Like I told you, the main thing that you have to understand is that tomorrow morning you will be getting an average. And that average is between the people that not only is this just a survey, I called it Family Feud today on stream because you are just surveying people. They used to do it by phone. I don't know how they do it now. You could go research all of that. But the whole point is the number that you're getting, it is an average. And now, given that everybody's opinions are so polarized due to politics, these numbers are getting out of hand. So I asked the AIs, both ChatGPT and Grok, I said, tell me when the inflection point started, and this is what we got. Essentially, when it comes down to the consumer sentiment, the most significant and sustained widening of the gap begins in February 2017. Pre-2017, the gap between pretty much Republicans and Democrats was about 10 to 30 points, with occasional spikes, but no consistent trend of expansion. Okay? So, like I'm saying, you could go and pull all this data yourself. Feel free to. It's all public data. This is from the University of Michigan. So, like it here, from 1980, Democrat, Republican, Independent. So you go through all of these years, again, even till recently, like I'm saying, the numbers just start to get very, very wild. So, like I'm saying, I have been in the market for a while. It's not like I always talk smack about the Michigan. I love the University of Michigan. If you guys would ever let me teach a class, I would love to. You let me know. That's it. I could do it online for you. I think it's a great institution. I have no problem with them. And that's what I'm trying to show you guys is that it really does boil it down to the political polarization that you live in right now. So, because if you go through all of this, it wasn't always this wild and picked apart, and the market was able to get reasonable data off of it. So, like we're seeing here, it was around 2017 after Donald Trump where things got a little crazy. And now here is some of that info. February 2017, the difference was about 38.2 following Trump's inauguration. Post 2017, the gap would frequently exceed 35 points between Republicans and Democrats, often reaching 40 to 50. Again, here are some examples, and it pretty much reflected a persistent polarization. So this was both in the beginning of the tariffs and then after the tariffs really got crazy. And I like that the AI had enough information because this is accurate. I do agree with it. The shift aligns with Trump's presidency. It was marked by political division. Republican sentiment surged post-2016 election. And this is what I want you guys to realize. Who do you blame? I'm not pointing any fingers. Again, this is the nature of political polarization because is it Republicans or Democrats? Is somebody to blame? No, it's that they both pulled apart. Republicans got really optimistic and Democrats got really depressed. Are you guys following the trend? And then vice versa, after you had these violent swings from Trump shouldn't have won to Biden to back to Trump, do you see what's happening? It's the same exact thing, if not worse, that you have now. Republicans, oh my gosh, I'm very optimistic, and then oh my gosh, is very depressed. And then vice versa, when you had Joe Biden, Democrats were very optimistic, and Republicans said this is the end of everything, no more Harley Davidsons, nothing. Yeah, you can't say anything on the internet. Okay, well yeah, you get it. So yeah, that's what happened post 2017. And that is what established the wider and more consistent gaps than the prior decades. And then that continued into Biden and then reversed. So the conclusion in all of this is that the difference between Democrats and Republicans in the index started to widen significantly and consistently in February 2017. This marks the beginning of a sustained increase in polarization, with differences often exceeding 35 points thereafter compared to smaller and less consistent gaps in earlier periods. That, and again, I think prior to the Trump era, this produced a much more better set of data for the market. Or now, in my opinion, I will be looking tomorrow at the independent number. So whatever number comes out on the wire or whatever, I'm going to ignore it, and I will be going to the data to get the political polarization out of the way. And I think the independent will be the one that will do all of it. I mean, technically, you can blame Trump. If you really wanted to, because it did all start after Trump was elected. I don't know if you blame the media. I don't know if you blame Trump. So we'll just blame both of them. How about that? You can't blame just one person, but I'd say welcome to political polarization. So, that being said, that is what I wanted you to understand about the University of Michigan consumer sentiment. So, that is the truth about it. I hope that helps you for tomorrow. And like I'm saying, I think the independent number, that will be kind of more indicative of where the real economy goes. And then I think everything else is just political theater and polarization until we get more evidence of anything else. So I hope that helps you out in the future. If anything, maybe you learned something new today, or go play with the data. Have fun. Tell me what you learned. There you go. But now we have a lot to talk about, Chad. I have a couple of things. I got another pretty picture. 16 days in a row of the NASDAQ dropping over 1%. Did you know that? I have another one for you. 15 days now without the S&P having back-to-back gains. It's tough out here, man. It's tough out here. So, I don't know how you feel. Man. So, you got an interesting market. Are you guys ready to talk about possibilities? Because, again, some people are getting a little bullish. Some people are terrified. And there's a couple of things happening. Are you ready? Are you ready for this? I don't know if you could handle this. I don't think you're ready for this jelly. I don't think you're ready for this. No. Because my watch list is to watch list this. No? Okay. That was a really popular Beyonce song back in the day. Okay. Anyways, that's my I'm sorry. Here's the deal. One, you have two options. One, this is an overreaction. Okay? The market bounces. You bounce off the 200-day. And I have another stat for you. I'm going to make you wait for it at the end. I have a really good stat for you. But one, this is either an overreaction, or two, Wall Street is actually ready for the detox. And I've heard people talk about this in relation to like deficits and a lot of other ways, but beyond that, just very simple. That means no new highs for the rest of 2025. So if this really is going to break down, if Wall Street is going to really reprice and really take in everything, and better yet, here's the thing. Remember, you got Powell, you got Donald Trump, and then you have your boy, the market. So if Powell does nothing, Donald Trump causes it through uncertainty. He didn't cause it. He caused it. He didn't. Yeah, just bear with me. Right? But Powell does nothing and just leaves the market. That's literally what happened in 2022. Just in 2022, you smiled because it was Biden if you were a liberal, and then you got thrown in jail if you tried to say anything to the contrary. Sorry, don't throw me. Can you throw me in jail now? I don't know. But do you get it? So Because literally, you mean to tell me now Wall Street gets brainwashed into this idea of repricing, revaluation after being extremely optimistic and all of it, and then Powell isn't going to, he's fine. Again, just we'll talk about it, but, think about it. Powell just lets it slide. That's literally what happened in 2022. Powell said, I'm not doing anything. He said, we need to do this. Jackson Hole, he hit you down again. He said, we need to raise rates. And, everyone said, I'll leave Powell alone. I do his thing. And then, where am I? So, all of that. So, yeah. It's either we really play out 2022. You don't see a high this year at all anymore. If Wall Street is going to take the detox pill, market throws a tantrum, get mad volatility, or this is all just an overreaction as not much has happened. So, you let me know. We will watch how that develops. But now, this kind of ties into it. It's a good idea to start talking about Powell. So I think he is going to provide kind of a checkpoint or a pit stop next week. He is going to be on the 19th. But unfortunately, like I've been saying here, I think this is a perfect setup for Powell. You now cannot blame him for anything. Do you understand? This time, if the market goes down, Powell is not getting blamed. You're not going to blame him for inflation policy. You're not going to blame him for cutting rates. And I'm like, just kidding. What? Just raise it before the election. Oh, just kidding. Cut it. Oh, I don't know. Yeah, you're going to forget all about that. So he avoids all blame. You blame Donald Trump. Again, it makes his job easier. Rates, whatever he wants to do. Move rate cut odds without ever having to say or do anything different than what he's already said. So, yeah, you just saw the market not really give much about the data. So think about it. Very forward-looking now. And Powell is in a position where, they're not blaming him. They're looking at growth. They're looking at Trump. They're not looking at the things you were just looking at that were related even to a soft landing. So maybe he punts, maybe he doesn't. We'll see what the SEP says, but I don't see why he wouldn't be hands off. But at the end of the day, I think whatever happens on Powell Day, we'll come back to that day, kind of like December 18th. He'll either kind of confirm, deny. He shouldn't do much, but that's going to be where, and again, we should start talking about it. You're going to end the week tomorrow, but then we get our boy literally Wednesday next week, and then we will see where that leads us, my friends. But that is your second key. And the final key, my friends, this market that we're in, ignoring the data, worried about so many things, the uncertainty, it's really kind of stop and go, not really fast or slow. I don't know if I can make a song off of that. I haven't made a country song in a while. But some things you can't make up your mind about right now. Still, I know, believe it or not, some things just haven't happened. You might barely avoid the government shutdown by this weekend. But there's some things you really can't make your mind up on, especially when it's one day this, one day that. So that's the problem. That's the benefit. Where, again, people are more dramatic than what's happened. That's why the market is very forward-looking. But then there are some things where, again, the uncertainty itself, already the initial tariffs and other things, we are starting to see those, and you can start to kind of get an idea of where things are going. So that's what I mean. We're going to get in bursts, things we got to kind of go slow on, things we can react to. And that's what I think we're going to really be going through, especially for the first year. But now, we have still got maybe like another, 30 days, I think? No, you still got like another 45 days or something. But yeah, the first 100 days, man. I think you have a lot more until April, whatever. So you let me know. But get ready for a lot more. And yeah, the S&P is in correction territory, but we will see where that leads us. But that is key number 3. And now, let us get into the plays. So that's consumer sentiment. I'm sorry. I got excited. I did. I think I'm getting sick. I'm getting a sore throat. This is a little bit I need some water. But here's the deal. We did this today. Today was a lot like yesterday. Yesterday wasn't as good. Today was a lot better with the plays. We were able to adjust, kind of were aware of it. There were still a couple of losing plays, but generally you had a lot more opportunity. And quite simply, if the indexes are reactive to the news, you're getting everything moving up or down, go with the SPY or the QQQ plays. If the indexes aren't being reactive, then I would only go for the individual single stock names. And that's what we did today. I played NVIDIA like I talked about yesterday. I went for some Teslas. We had a couple of SPY plays. They were a little better, was a lot more patient in the morning, but generally the single stock names were a lot better to trade in this awkward environment. So keep your eyes out for that tomorrow. We'll see what type of move we get after all of this craziness. The out of the money, in the money dynamic, that is still in play, meaning that out of the money plays, the skew, if we get a 2022 type move, they're not really going up. You're able to profit more. You have to risk more, but near the money, in the money, those are the better ones. So that's still at play. And then finally, are you ready? So this one's for the bulls. My bullish people now. If you do think this is an overreaction, are you ready? Looking at the past 20 years, March 12th is the last day of the year that has a negative average year-to-date return for the S&P 500. From here, things tend to improve significantly. Do you understand what that means? Is this like a Bible verse? This is like a stock Bible verse. Do you know what that means? Do you need the King James Version? And I think this is New Living Translation. Do you know what it means? Again, I don't know what's going to happen. But like we said, it's either Wall Street takes the detox or this is an overreaction. And what this quote means is this chart right here. So, yeah, pretty much March 12th is usually the bottom over the last 20 years. But do you guys not remember? I think it was like it was one of these years. There was like some stat with seasonality, and then it got absolutely obliterated. So if you're going to break a 20-year record, you're going to do it this year. So, yeah, but either way, if you don't, then technically, seasonally speaking, you have made it through the storm. Otherwise, yeah, we'll see where we go from here. Ta-da! And there you have it. There you have it. Thank you. Thank you. Thank you. So, any questions? I think I need to go soon. I'm getting clapped. I need to go get me vitamin C. I'm going to go to bed, bro. That's it. I'm getting a sore throat. Fucking daylight savings, stupid ass. Oh, let's move the clock. Why? No one has a farm anymore except for Bill Gates. Why? This is crazy. Can you pull up March 12th, 2022? Sure. Again, I don't know if you just got here or not, but before we get to that, just as a reminder, like we said, if this does play out like 2022, We will not get a new high for this year. Okay, let's get back to it. When was 2022? Was that a decade ago? Yeah, you bounced, I think, March 12th, but you still died afterwards when Powell said, no, no, no. Turn off the VWAP. Yeah. So literally March 12th, you legitimately, like, a couple days later, you danced around a little, and then you rocketed. Yeah. So we bounce or die. Kind of. And even if you bounce, you could still die if Powell doesn't step in, if Trump gets worse, if the media gets worse, and then the market tantrums, the earnings. So, yeah. What do I think? I don't know. I think I could respond efficiently, and I think my strategy will win no matter what. Like diversified, I got enough cash. I'm not heavy in anything. And then, yeah. So as long as that's there, I don't really know. That's what I've kind of been saying here as we've gotten to Trump. I think Trump could either bring a lot of good or a lot of bad. And even then, I think some stuff, hit the way he goes about it could cause a little friction. I do think some people are overreacting in some areas. And that's why, I think either way, it's not up to me. So it's a mix of just kind of being balanced and ready to go simply because I've, even this last half a decade further reinforced that the market doesn't give a fuck what I think is what I've learned. So at the end of the day, you got to have a good strategy that will weather any environment. And that's, the last 5 years we did survive. So I'm going to try to stick with that. And yeah, just I think if you underreact, the long term will win. And then again, even in the short term, as long as you're not trying to force anything and you keep it content, and again, don't expose yourself too much. I'm not in any crazy amount of plays, even doing smaller options. I've made a bigger like in the near the money plays are more expensive, but I've been flipping out of them quick. So at the end of the day, though, it's been I don't have that much exposure. I just got my long term, and like I'm saying, I'm ready for both sides. And whether it's a buy the dip or short the hell out of everything and run, I think I could respond either way. And that's kind of in the short term, but long term is easy. You stay diversified. We're building our cash, and I think we'll be good. Big of a flush. We got if you could go another 15%, maybe 10 minimum, because right now you're at a correction. Bear market would be like 20, I believe, or 25%. So yeah, I think bear market is bear market 20 or 25. Forgive me for the nickel, but I think a bear market is 25. I don't know. I'm sorry. I'm an old bear. I'm getting old, but you're at 10 right now. That's a correction. So 20, yeah. So 20 will get you your bear market. So you got another 10% in store. But that's from the high too. So add that. Don't count it from here. 10% from here is lower than 10% from the high. Welcome to math. I know, it's a bitch. I know, that's why I don't like math. I know. So if everything bounces, the diamond is not in play. Habibi. Diamond, I wait for diamond. Have you ever mined would you like to watch diamond mining videos? Do you know how long the diamond take to form? Do you know the history of carbon? Do you know how long it takes for carbon to form in Earth atmosphere and in the Earth, the core of the Earth to be released and to make a diamond? Do you know how long it takes for diamond? So maybe it does, maybe it doesn't. But that's kind of the beauty. You'll know the diamond when you see it. I don't think maybe we miss everything, maybe we don't, but either way, that's kind of what I was saying with the long-term strategy. Where we're at now, we're winning, we're ahead, you're outperforming, you got some good names, you got some names coming down, but at the end of the day, the cash balance is really low. So even if I wait, I don't think we're going to miss out on anything. You're going to get a little bit more yield, but building up cash, I mean, if this was a little bit of a teaser, that was great. It's kind of that kind of, if this is Let me put it this way. The way I see the market right here, right now, when every mother effer is telling me, Josh, there's so many long-term deals right now. When I was telling motherfuckers this 4 months ago on every value stock, and they're like, nah. But anyways, you see this move right now? You see this discount? I view this as modern-day Black Friday discounts. That's how I feel. Because underneath the surface, this isn't really a discount. The ratio of S&P to the Mag 7 is the lowest it's ever been, or since 2017. But everything else is still kind of up there. It's not like this is like a deal. Like, that's why I'm saying, like, you got to really pick it apart like we were 4 months ago. We were picking off all the value. There's a couple of bargains here and there, but I don't think the list has changed dramatically. You know, NVO's going a little lower and all of that, but Hershey's was getting there. That shit popped up $30. Like, it doesn't, you know, you had some names, but I don't think anything is like, yeah, it reminds me of Black Friday nowadays. I want, I want Black Friday deals like 1999. That's what I like. I want people like fucking fighting each other for a 20-inch flat screen. You know what I'm saying? Like, that's why. So, like, that's why, like, you could be right here. I want, like, I bought Meta, I believe, literally right one of these. I bought Netflix, like, here, and then we bought Meta, JP Morgan here. So, yeah, you get what I'm saying? That's what I want. I want, like, the real Black Friday deal. And guess what? I don't have money. So, it's not like, that's what I'm saying is, like, I'm really not, like, I have 3% cash or something. So even if I wait, it's not like I'm making a bad decision. It's not like I'm, you know, if anything, I think I'm behind when it comes to cash. Does that make sense? So, like, you got to be really tempting. Like, yeah, it has to be really tempting. Like, I don't know, like, I'll sell my house, but you got to give me, like, a really good offer. But, like, any offer won't do. Let me see. Yeah, bro, I have 2.5% cash. You make up well for that on your options plays? No, I rebuke thee. If it sizzled, you're a demon. Because your options are separate from your long term. Those are two completely different avenues. So you should not commingle them. They're two separate activities, two separate sources of income. One's not even a source of income. I said you, not me. Yeah, what do you mean? You think I get special rules like I'm Nancy Pelosi? Mm-hmm. What? So no, we all get, it's the same rules. I mean, that's what I do. My options accounts are all separate from my long term. I never look at my long term. I don't think you guys ever hear me say, like, I'll tell you, like, oh, I have it in the long term, but I'm never like, I did this on the long term, so now I could do this on the short term. Or I did this on the short term, now I could do this on the long term. They are two completely separate life paths, if that's the way to describe it. You don't use options to add to the long term? No, I do not. No. You can, and I think you should, but once it goes in the long term, it's separate. But try not to let one influence the other. I mean, better yet, it's kind of, and I never really realized it, I guess this is the way, the ancient proverb, don't let the right hand know what the left hand is doing. That's kind of what I'm trying to communicate. You know, you don't want your options to influence your long term, and you don't want your long term to influence your options. You know, so you could do whatever you want in each hand, and however you please, and if you put one to the other, but, you know, you kind of ideally want to not let them influence each other so that they are separate. Amen. Gold hit 3K. Uncle told you first. I mean, it's actually a very big deal, bro. Fucking boomers all around the world are just rejoicing right now. You know that? I swear to you, there's people who will go to church this weekend and praise the Lord. You know that? Somebody out there is thanking their conspiracist theorist pastor for putting him on. Nah, in facts, though. You know what I'm saying? And he did good, though. And y'all hating and all, but the Lord provided. I'm just saying, laugh all you want. Joke around all you want. But the Lord provides. This is crazy, bro. What's the blue line there? I think open interest on the futures. Yeah. God is good. God is good, baby. When you found a deposit, are you going to put more than one deposit? I'm going to put all of it. So, let me see. I think. Again, the kingdom of heaven is like treasure hidden in a field, which a man found and hid. And for joy over it, he goes and sells all that he has and buys that field. Again, the kingdom of heaven is like a merchant seeking beautiful pearls, who when he found one pearl of great price, went and sold all that he had and bought it. That is my plan. So I'm building up my cash in expectation that this beautiful pearl is going to fall in my lap, and I'm going to put all of the money that I am saving in the long term into it. All the cash. But again, even if I save up all the cash for a year, it still would not be more than 10% of any position. Man, it's so balanced. Oh, man. So that's why I'm saying do you not realize? So if you are in that same position, you have nothing to do except build until diamond. Like, for real. Because it just doesn't, worst case. Same goes for the small account. Because the small account doesn't have that much cash either. Ideally, small account, you want to put it to more work, but the small account is doing better because it already has other growth. So cash. You need good cash right now. It's if you have good investments. If we're at 2%, 2.5%. We are behind in cash. It just worked out because we bought all of the other stuff that was we bought. Again, we went heavy at the right time on the right things. Value. That's what we did for the last year and a half. Thankfully, luck, skill, opportunity, whatever the fuck you want to call it, we got Netflix, Meta, and a couple growth names in there as well. But we were fully invested, hitting it every single month, bro. Think about it. I didn't build any cash. So if you did the same thing, you don't have a high cash balance right now. So while everybody's fucking panicking or whatever they want to do and telling me it's Black Friday or not, you can now build up cash while everybody spent it. Because that's what you need to do now if you don't have it. But meanwhile, people are trying to find cash, do this, rebalance, all that. So it's like, dude, yeah, we don't need to, you're in a good position. No, not through dividends, through just the deposit. I'm just not using the deposit until I find a really good deal. So that's what I'm saying. I want a really high quality name at a good, fair price. It doesn't have to be the best price. I kind of want a NVIDIA in the middle. I'll be fine with that, but it doesn't have to be the best price. It just has to be fair, but it has to be valuable. Yeah, but the dividend is dripping on its own. That does its own thing. You always reinvest the dividends unless you're older and need to live off of the income. Not NVIDIA at 90. What the fuck, man? See, you get out of here with these fake ass Black Friday deals. Give me NVIDIA at like 40. Nah, I don't know. Yeah, bro. I don't know. Give me NVIDIA at like $60. Or better yet, just like the rest of the chip index. If NVIDIA was like the stocks, it would be at $40 right now. Easy. It would be at 40 if that was really like every other chip maker. I think, yeah. Stock, which one is it? One of the fucking, one of the chip indexes. Yeah, it's like back to 2023. SockSell, I believe. No, this is the bull one. There's another one. There's a full-ass index of chips that's given up a bunch of it. It's actually crazy. But even then, this is why people are talking about it. If it drops more, I think you'll get a better deal. But, yeah, it's not there yet. That's what I'm saying. We need to, if you don't have a lot of cash, I think you swing at a good deal. You need something that, distressed at the time. And guess what, bro? I will further defend my case for building cash because people are very expectation driven. You know what I'm saying? So, you just wait till motherfuckers freak out, dude. Because, we got Meta on a freak out. You'll get it where, again, dude, they were just wait till they tell you the biggest company in the world is going to disappear, and then you'll know what I'm talking about. I want Airbnb, but I think we could get it cheaper because it reminds me of 2022. I remember buying Airbnb at like 120, 125, and I remember 3 months later, I wish I had more cash. How about you? I don't know how long some of you been here, but I remember buying Airbnb at a low, even at 125, and I liked it, but a couple months later, I was like, damn, I wish I had more cash, and there was a lot of other names. So I like it a lot, and I think this is a good price, but I think it's going to $100. I think it's going to 100. And I think I will buy a lot of it at 100, or I could begin my monthly deposits, but I don't know if that's my diamond yet. I need Airbnb a lot lower for that. Don't scare me. Are we going to go down more? You got to watch the list, man. And you're on it now, but you just joined a little late. So I don't know how you want to go back in time. SockSell is not a valid long-term. Anything that's like a 3X or just one of those ETFs, don't play with it. Miss Juki watching? Wow. Well, bless you and bless Miss Juki. She a real one if she watching the watch list with you. You know that? You better go take her out to a nice dinner. You know that, Miss Juki? I tell him to take care of y'all. And Miss Juki, he better have a good long term. Don't let him be gambling out there. He better gamble he better give you the money and take you out than gambling it on options. You know that? The long term will make y'all get a crib. She giggling. You better not be gambling no dailies. That'll stop the giggling real quick. Like bad. And then if you have cash, a lot of cash, you find a couple of the names we've already put on the list. Ulta is kind of a growth name, but I think easy. Pfizer, it sucks because Pfizer came down now. Nice. Well, not really, but yeah. So Pfizer, I don't like it at 27. That's 10%, bro. You know that? Do you guys see why I'm such a stickler? I don't know. Because that's 10%, bro. 27 to 25 is 10% in 3 days. That's what I mean by 10. I don't so that's why I say I don't buy it at certain prices or lately, I don't like this little back and forth with it. I've always told you I like it at $24 or a little lower there. I have a lot of Pfizer and I still like it. I'm just kind of waiting. It does pay 6%, but cash pays out 4%. So I'm okay with getting less yield if it means I could buy way more Pfizer down the line. You know what I'm saying? So I like Pfizer, though. If you have a lot of cash, Pfizer's a good place to start. Not a recommendation. UPS, I like it as well. I like Whirlpool. I'm finally down on. It's actually right where I bought it, I believe. I'm in at $89. I went negative on this once or twice since we bought it. So, yeah, I like Whirlpool. It's a high yield, but be careful. Don't go listen, the high yield ones are good, but don't be a dumbass. Do you know what I'm saying? Just because it pays a high yield and you have a lot of cash, you're the type who will fall for the dividend trap. Does it make sense why? Because you're like, oh, I hold a lot of cash. Oh, I got to not spend my cash ever. Wait for the crash. Oh, you know what I'm saying? And then you're like, okay, so the thing that's going to convince you is if you're like, oh, okay, I get 10%. Good, okay, good. Yeah, don't do that. You know what I'm saying? Same strategy. You get what I'm saying? Little by little, I'm just giving you options right now. You're asking me if you have a lot of cash, what names are there? These are names that I like, but just don't go for the high yield ones and start throwing them in there. Like even MPW, this is extremely risky, but no, they're up on it. This one's weird. I said that on the last watch list. I like it a lot for the recovery, but I would maybe if it ever comes down to back to the threes, I think it's an easy buy with a 3 handle. But other than that, it's still a little odd. I would not buy more MO. No. See, this is because MO, like shit like MO is why we're chilling. I think I bought MO in October, dude. I don't even know when it was, dude. It's actually insane. Because this is what I'm saying, like, why we need to build up cash, because we were using our cash, but we weren't buying NVIDIA. We were buying MO, bro. We stacked up a lot of that stuff, but that's what I'm saying. I'm not CNBC. I'm not Bloomberg. I'm not here to tell you to buy my plays when they're already up so you could be that demand there. You know, I think you should go look for the names I'm down on, and then I think you should go find names that aren't up 50% in 6 months or something like that. Because, like, dude, where is it? Yeah, October 3rd, 2023. Oh, wow. That was March 2024. Yeah, so it was beginning of the year. Wow. So that was a year ago. Felt like just the other day. But $39. It's up 50%. Like, yeah, I can't do it. I'm sorry. Is it risky? Yeah, it'll come down, bro. That's the thing. That's how these boomer stocks work. They don't stay up. Just trust, like, don't fall for it. You've seen it already, guys. You've already lived through this shit. You know what I'm saying? How many times does it, everybody loves Altria, and then all of a sudden you're going to complain to me for 2 years that it doesn't move? That's how value names, when they work, they love it. That's why boomers love it, because they're dripping it and they're holding it, and when it runs, it really, really runs. And it will run for a little bit of momentum, a year or two, maybe longer, and it runs, and they love it. And they're like, yeah, buy it anytime, just like gold. They're like, buy it at any price. You see what I'm saying? But eventually, when it stops, it's going to hit a wall, equal and opposite. Then it's going to chill out for a year or two and not do anything and be depressed. And then when that happens, they're going to be like, well, I get paid my dividend every year. I don't care. See, so you see what I'm saying? That's their defense. So don't fall for buying value names on a high value. Don't buy them at all-time highs. I can't do it. I hate it. Buying, because that's what happens. You buy it at all-time highs, it goes down 20% back to where it started. The people who hold it, well, you get the dividend. Oh, I have my dividend anyways. It's like, oh my God. And then it'll do that. So again, you've been through this. I think 10 years, 20 years of MO. You know, you get your rallies, you'll get your depression, you rally back up, kind of spend a year. I guess it was here you did nothing from 2012 to 2014. Kind of did nothing. Rally, give it up. Rally, give it up. Rally, give it up. Rally, and then we see you might get another couple years. And again, it's a good industry and all of that, but just wait till you could get it at a better dip, or if you miss it, I would find where you could put your money in that's better. You know, that's the thing. There's always something. It's all crop rotation. If you can't buy MO right now, you could buy makeup probably, or you could buy Nike, or you could buy a washing machine, Whirlpool. You get what I'm saying? Like that's how we got to MO. Yes or no? Why did I buy MO at $39? I wanted to grow yield. I wanted dividend. And guess what? Everything else was already up. Do you feel me? So that's why I'm telling y'all not to chase, because look at all the plays that we have. We got them all by doing this. You miss it, you miss it. Go start looking where you didn't miss. That's it. Nvidia's already up. You're not buying Nvidia. Tech is all up. You're not buying tech. Go find what you can buy at the time, balance it out. And then again, you're going to have at the other times, just like now, when tech comes down, now we're going to be able to buy tech while everybody's going to buy value, where now the value goes up. But you don't need to go buy the value now at the high. Whatever you miss, go find the areas you didn't. That's why, again, the UPSs of the world. What else is there? You guys have any other ones? I liked Hershey's till it bounced. I was telling you guys this even at the beginning of the year. So you see what I'm saying, though? But don't buy it here because that's how you get trapped. I like NVO. That's a growth name. I really like NVO. I think it could go to 60. I'm down on it. I bought it at 80. Finally went down a little bit more. Donut? I'm not buying Krispy Kreme. But I don't know. Yeah, I don't know if Krispy Kreme will be here in 10 years. They have been around, but no. I've only had Krispy Kreme one time in like 3 years. Pfizer, we've talked about that. Starbucks, it used to be. Honestly, if Starbucks didn't have fucking Chipotle guy, it came down. But Starbucks at like 70 is a decent price. But that one's up on the year too. Target, that's a new one. That's a new one that came. See, Target, they could go a lot lower as well, but even then, keep this one on watch. At least you're buying, maybe it goes down for another year. Intel, it's up above my latest purchase, but Intel's a great chip. Look at that. You're buying it 2010 prices still. So you see what I'm saying? There's some stuff you didn't miss as much. Walmart is still up there. It's coming down, but, we should have bought Walmart. We talked about Walmart. We just whiffed on it. But I think Walmart's a little bit up there. Because like I'm saying, just look at how much the price has increased. This is a chart for price. Try to get something at a fair price that's a good name. You get what I'm saying? Chipotle, honestly, we need a little lower, but it's better than not. It just depends on how much cash you have at that point. If you want the more expensive you're buying, you better have a lot of cash and you better be going small. But otherwise, I think if you really want to maximize like UPS, Pfizer, Target, NVO, NVO's even a little trickier because NVO is only at like a 2-year low. You get what I'm saying? But like UPS, multi-year low, Pfizer, decade low, even Intel to a degree, it just already went up. You're never going to get Walmart at a good price. I disagree. You're talking to a guy who got Meta at $90 in 24 months. Now you're going to be like, but this time it doesn't matter. But so don't tell me I can't do anything. You see what I'm saying? I've seen too much stocks in my life. Anything is possible. And if it doesn't happen, I do not give a shit. Why? Because this is why we balance, and our money is going to move to where it's going to be maximized and still have that long-term potential without us changing our minds for a 10-year minimum. Amen. Amen. Trade Desk. I was asked that today. I like it. I like Trade Desk. I really do. I think, honestly, even a 5-year low for a growth name is really attractive. And I really like it. So this could be one. If you want to go small, you can. But, like, legitimately, if shit gets bad, you will literally still lose, I think, 80% on this stock. Sadly. That's the only problem I have with it. Win, I like. But casinos are shit. Honestly, haram, habibi. Anybody I never really meet people who make money in casinos. It's so fucking odd. But I like Win. I use the product. I not as much anymore, but I like the brand. I love the hotel, the casino. I like it. It has China, it has America. I like the mouse. I think we're up on the mouse if it comes back down enough. But look at everything is getting. That's what I'm saying. Let everything come down a little. I like Nike too. So we'll see. Oh. You hear that? I need my vitamins, bro. Chad, I think we gotta call it, bro. AMD. A little bit more on AMD is like is very middle ground right now of like chips because you're back below 2023. You're still like overvalued, but then you're like really off of your highs. You know what I'm saying? It's that one is just like, but then again, the Lord would spit it out. It's very lukewarm. I think AMD is smack dab in the middle of like it could be AMD or it could be the next Intel in a bad way. You know what I'm saying? Or it could be the next NVIDIA in a good way or the next AMD. You know, SMG, that's another one. Scott's Miracle Grow. PayPal 50s, I agree. See, but look, all of these, I hope you guys see it though. Like, y'all got to show me some love, man. Because, like, y'all realize, like, a lot of these names, man, and even when long terms were going all-time highs and everybody do you guys see why I was telling you don't buy these fucking names that we're up on and don't buy these high-ass fucking names? Like, for real. Like, do you not see this? Bro, names I was up 30% on 2 weeks ago. You've given up all of it. Like, do you not see what has happened even from the beginning of the year? So I hope y'all see what I have been trying to communicate to you and why. And I hope you see it was in your interest, your best interest. You know what I'm saying? Like, this is exactly why I'm telling you to focus on a certain set of names with a certain set of value. So, yeah, man. You tell me, bro. Oh, the peach. What up, baby? My man. On that note, Chad, I'm tired, bro. I think I'm going to be waking up sick tomorrow. I already feel it, bro. That's it. I don't know what I'm going to do. Maybe tomorrow we do a musical instead. Maybe I'll get a substitute teacher. You know, do you guys want to sub? Does anybody want a substitute teacher? If you'd like, I could do an interview. Does anybody want to host tomorrow? I'll be there. I could supervise. Uncle, maybe Uncle. It's early though. For Uncle. Lending tips. I don't know if it's that serious. Have Swiss Miss do it? I should. She's so shy. Bro, it's so funny. She's shy. You might be able to. Oh, I want to set up my other monitor. So remember I told you I got those little travel monitors? Is this weird if I wanted to put a monitor flat on my desk? I wanted more eyes. So right in front of my mic, I want to put a 20-inch monitor laying flat on my desk so I could look down and see info. Or I was going to put one on my floor so when I'm doing even push-ups and shit too, or even if I look down, I want to have eyes. Yeah, kind of like a tablet in a way. Yeah. It does mess up your posture. But then again, I got crackhead eyes. I can scan real like, it's crazy, bro. It's crazy. I've used my crackhead skills for the good of the world, I feel like. You know that? So it's good. It's a good thing. Bathroom too? No, I don't need that. That's fine. I enjoy going to the bathroom. I like walking away from the computer. It's nice. All right, Chad. On that note, God bless America. Without the veterans, you wouldn't be here. So tighten up, man. Stop being a little B-word. You're a B-word if you don't appreciate the vets. So thank you, veterans. And God bless all of you. And let's get it. And please don't ever forget, you know why we're here. You know that from day one, the reason. It is finger to the sky. But also, I tweeted it. From day one, I never told you to look up to me. I told you to buy me a house. Do you get it now? Do you understand? Do you see what is at stake? Do you know the purpose? That there's a lot of implications there. Wow. So, Chad, God bless America. Have a great evening. Get ready for Friday on the Horn.